Hey everyone, it's Monday morning, March 17th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella. Since it's Monday, that means it's time to dive into the big market movers for the week ahead. It's going to be a busy one, so let's get straight to it. Before we begin, a quick note. Today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. Stocks took a serious hit last week. The S&P 500 dropped nearly 2.3%, the Dow Jones fell 3%, over 1,300 points, and the Nasdaq Composite was down almost 2.4%. And here's the kicker. On Thursday, the S&P 500 officially entered a correction, falling 10% from its February peak. Now, all eyes are on the Federal Reserve. The big question, will they cut rates, or will inflation and fiscal uncertainty keep them on hold for longer? The Fed is expected to keep rates steady when it announces its next policy decision on Wednesday, but investors will be glued to Jerome Powell's press conference, searching for any hints on what comes next. The Fed's dot plot will also be key, mapping out where policymakers see rates heading for the rest of the year. The market is currently pricing in about 3 rate cuts in 2025, but will Powell and the Fed back that up? We'll find out. And let's talk about consumer spending, because that's where things get really interesting. Monday's retail sales report will tell us if the recent slowdown in consumer spending is just a blip or the start of something bigger. January's retail sales showed a pretty ugly 0.9% drop. Economists expect a rebound in February, forecasting a rise of 0.6%. But if the numbers disappoint again, it could reinforce fears that the economy is slowing faster than expected. Speaking of expectations, Wall Street is also watching earnings this week, with reports from Nike, FedEx, and Micron coming up. And well, let's not forget the Magnificent Seven. These mega-cap tech stocks have been leading markets for years, but they've been in serious trouble lately. Nvidia, Alphabet, Amazon, Meta, Apple, and Microsoft are all down around 20% from their highs. Tesla? Even worse, it's off nearly 50%. But despite the sell-off, these companies still make up close to 30% of the S&P 500's market cap. That means their next moves will be crucial for the market's direction. At the end of the day, here's what we know. The stock market is at a critical juncture. Rate cuts, inflation, consumer sentiment, it's all up in the air. Will markets bounce back, or are we in for more pain ahead? That's the big question. That's it for today's Capital Markets Quickie. Make sure to follow for more updates, and I'll catch you next time.